Hi, Larry Berman here, and here's what's on my radar this week. An interesting week from lots of perspectives. First and foremost, what we've been talking about for the better part of a couple months is the strong earnings parade that we expected in April, and that played out really, really well. Continues into early May with strong earnings numbers. But the market in the last few weeks has really started to spin its wheels, and I think the main reason for that is ultimately all the stimulus that's driving GDP and earnings last couple of months is really now going to face a tremendous headwind. The Treasury funding announcement came out for the next 2 quarters, and we're looking at new financing needed of around $600 billion. So that's going to be a big sucking sound out of asset prices in general. The bulk of that is likely going to come July, August, September. Refunding quarter. So that's a big thing to look at in front of us, and is really a strong reason for asset markets and equity risk premiums to start moving up, i.e. interest rates start going up. So inflation expectations keep ticking up. We're seeing new highs daily on things like lumber and copper and soybeans and you name it. Even Brent crude prices still pushing highs. So a lot of move in that direction. A lot of talk about inflation expectations, and that's going to become a challenge for margins, etc. So markets are going to be stressed. We heard from Janet Yellen this week. Again, same topic. Said maybe it's time to think about start raising interest rates. Equity markets didn't like that. Within a few hours, she walked that back. Oftentimes, the Treasury and the Federal Reserve will put that kind of feeler out there and see the market response. And it's clear the market does not want to see higher interest rates anytime soon, any talk about tapering. So the financial stability update came out. And turns out it's anything but financial stability, and they're very, very clear on the problem with SPACs and just the leverage in the system, and basically, without using the word bubble, said things are getting a little bit ridiculous, and it kind of reminds us of that famous Greenspan speech in December of '96 where he used the term irrational exuberance. So Powell, a week ago in his statements and Q&A after the Fed meeting also used the word frothy. He obviously knew what the financial stability report was going to say, and therefore it was okay to start saying that. The market's going to have a challenge here, notwithstanding periods of strength that we end up seeing, but we are seeing the behavioral side of market breadth weakening, and the divergences are starting to build. So to me, a sell in May, go away kind of thing. Markets are at a high cautionary area for a pullback, not huge, 5 to 10% range, just taking some of the froth off at this point. To get a much bigger correction than a normal course correction like that would involve a big policy mistake. And at this point, it's the Fed not doing enough that would cause that, rather than probably doing too much. Of course, the bubble can still get bigger. We saw an upside raise to year-end S&P of 4,600 this week from one of the dealers, and our best guess is 3,700 is where we should fundamentally finish the year. So way below and in line with about a 10% correction, from where we are now. So in terms of bull and bear picks of the week, on the bull side, we added to a couple areas in our portfolios on the panic selling, if you will, in the clean energy area. There's a lot of good companies in there, so we added to clean energy, and we also added to the marijuana sector. 2 longer-term themes we think are going to do very, very well, but right now succumbing to some of the market pressures in some of these meme areas, if you will, and fast money areas. So recent pullback, good buying opportunity. On the other side of that, we are very, very mindful of the high valuation in large cap tech and in the broader small cap index. Russell 2000. Those are two areas where if you're looking to put out some shorts, would be the way to do it. So an inverse NASDAQ exposure, inverse Russell 2000 exposure, and nibble away at some of the longer term thematic areas that you like at this point. But for us, it was clean energy and marijuana this week. Have a great week, everyone. Remember, follow along on our YouTube channel, Larry Berman Official, and click the alerts so you know when we have new material out. Be safe. We're going to get past the worst of this COVID yet.